Hey there, welcome to our channel. If you're new to investing, you might feel overwhelmed by all the jargon and options out there. You've probably heard terms like mutual funds and ETFs thrown around a lot, but what do they actually mean? And more importantly, how do you decide which one is right for you? Don't worry, we're here to help you make sense of it all. Let's break it down step by step. First up, mutual funds. These are one of the most common investment vehicles. Mutual funds pool money from many investors to buy a diversified portfolio of stocks, bonds, or other securities. This diversification helps spread risk. Think of it as a big pot where everyone's money goes in, and a professional manager decides which investments to make. This manager aims to achieve the best returns for the fund. You buy shares of the mutual fund, and the value of your shares goes up or down based on the performance of the fund's investments. It's a simple way to invest without having to pick individual stocks. Now let's talk about ETFs, or exchange-traded funds. These have become increasingly popular in recent years. ETFs also pool money from many investors to buy a diversified mix of investments similar to mutual funds. But here's the twist. ETFs trade on stock exchanges just like individual stocks. This means they can be bought and sold throughout the trading day at market prices. This flexibility allows investors to react quickly to market changes, buying or selling shares as needed. Unlike mutual funds, which are priced once at the end of the trading day, ETFs offer more flexibility in terms of trading. So, what's the difference between mutual funds and ETFs? Let's dive into the key points to consider. Here are the key points to consider when choosing between mutual funds and ETFs. 1. Management style. Mutual funds are often actively managed, meaning a professional manager makes decisions about which securities to buy and sell. ETFs, on the other hand, are typically passively managed, tracking an index like the S&P 500. This means they aim to replicate the performance of a specific index. 1. Fees. Mutual funds generally have higher expense ratios due to active management. These fees can eat into your returns over time. ETFs generally have lower expense ratios since they are passively managed. Lower fees mean more of your money stays invested. 1. Trading flexibility. Mutual funds can only be bought or sold at the end of the trading day, which can limit your ability to react to market changes. ETFs, however, can be traded throughout the day, giving you more control over the timing of your trades. 1. Minimum investments. Mutual funds often have higher minimum investment requirements, which can be a barrier for some investors. ETFs, however, can be purchased in smaller amounts, even just a single share, making them more accessible to a wider range of investors. So which one is better for you? It really depends on your personal investment goals and preferences. If you prefer a hands-off approach and don't mind paying a bit more for professional management, mutual funds might be the way to go. They offer the benefit of having a professional manage your investments. On the other hand, if you're looking for lower fees and more trading flexibility, ETFs could be a better fit. They allow you to take a more active role in managing your investments. Remember, both mutual funds and ETFs offer diversification, which is a great way to spread risk and potentially enhance returns. Diversification is key to a balanced investment strategy, and both options provide this benefit, and both have their pros and cons. The key is to understand your own financial goals and choose the option that aligns best with them. Take the time to evaluate your investment strategy, risk tolerance, and financial goals. This will help you make an informed decision. All right, that's a wrap on our walkthrough of mutual funds and ETFs. We hope this has helped clarify the differences and benefits of each. If you found this video helpful, give it a thumbs up and consider subscribing for more beginner-friendly investing tips. Your support helps us create more content like this. Thanks for watching and happy investing. Remember, the best investment you can make is in your own financial education.